Hello, friends. The topic for today is very important topic from bank's perspective. People would like to join bank. Credit is a very eminent section of bank core business. So you see, we need to understand the concept first, so as to use it later. So let's start with the discussion for the day, which is on loans and advance. Now you see, what is a loan? If you go with the layman definition of this word loan, it is something. A loan is actually an amount which is given by a financial institution to another person or to a group. Okay, let's say it is an enterprise or some company to whom this money is given. So, and it has to be repaid back on a future date with some amount of interest, any which is add on to your principal amount. Okay, so this is what is a loan. Let's go into it. uh, Now you see, what are the major reasons which led to the growth of credit, especially the retail credit. You'll understand, if you look India's economy, you'll find that disposable income across different age groups is growing up. Post COVID, things have improved a lot. Now you see, companies have started giving double digit hikes. So this era is like, actually, after a lockdown, again we are now fully operational. Employment is like growing in terms of numbers, and then when you need manpower and skilled manpower, so hikes is what is imminent. Now you see, when you have the better disposable income, you see what is going to happen is like, you'll get more of consumption in your economy. So we are going to have this phenomena also, which is called as consumerism. Okay, so you'll, if you look at our own population, you'll find major chunk of your total population is into young category. Okay, India is able to sustain their like, you see, the growing age group, because they do have like a very big population which is into the young population category. Means there will be problem for countries where you see older people are more in number and then youngsters are not there. Now you see, someone has to take care. So yani, the number of people who are supposed to take care should be greater than the number of people who are supposed to be catered. So you see here, India's right now is into a point of advantage. Let's go forward. Now you see, fiscal incentive for home loan is, again, you see, many a times you have seen that government is promoting people to have their own houses. For this, they are giving you incentives like interest rate subvention, where you see government is allowing certain interest waiver, or they are ready to pay it from their pocket, just to motivate people to have their own houses constructed or to buy small houses. Okay, then further, you see, the mindset is changing. Earlier we do have a mindset where we used to like first save and then we need to go for consumption, but now things are changing very fast. So here, new generation people are like, they are very impatient. They buy first and then maybe they are willing to pay it later. So this culture change is again a very important phenomena which is giving a boost to our credit segment. Then next is like desire to have improved lifestyle. You see, when you take loan for some basic necessity of yours, so what is happening is like, overall lifestyle of an individual is going up, and now today is an era of show off. So you see here, not only show off, but also somewhere down the line you see people having a better lifestyle with better facilities at their doorstep, and it is only possible because they have banks nearby who are willing to give you finance, and then this money is used for consumption. So means even producers are getting an incentive, and if they're having good margins, they'll keep on doing it. So this leads to a very positive environment in your economy. Then next is like banks waving for higher market share. Means when you see, there are banks who are aggressive in nature. HDFC, ICICI, Axis Bank, they are very aggressive. Now similar sort of trends are visible in State Bank of India too. When you look at their profits, their market price of their shares. So you see, when banks are aggressive in nature, so on one side customer is willing to borrow, and on the other side banks are willing to lend. So this is a win-win situation, especially for credit segment. But you see, sometimes we need to be cautious, because reckless lending will lead to big disasters. In past we have observed it. And then we have nowadays new phenomena as nuclear families. People stay independent, they don't stay with means bigger families, joint families. Hence you see, everyone tends to do consumption as per their own liking, and this leads to overall a hike in your overall consumption, which is again a boost to credit segment. Now you see what comes under retail credit. So you can see all these dimensions. consumer durables, credit card is a part of it, education loan. Some of you who are into this age group, let's say you study in India or you study outside India, so education loan is a segment where people are willing to take money. Housing loan is something very important. Everyone, when you start earning, the first thing which comes to your mind is like you have to have a house, because making a house in one's life is only once or twice life phenomena. Okay, so making a house is the most toughest call. So when you take a home loan, you are engaged or you're committed to a bank for almost a couple of decades. So it is going to take away major chunk of your salary too. So you see, this is one very important area. So if you look into the total proportion, you'll find major chunk in your retail credit is related to housing loans. So 50%, approximately 50% of your total portfolio is into home loans. And then next most important is like you have vehicle loan. Okay, so vehicle loan is comprising around 30%. So the remaining 20% is in context of all other segments. So this is no doubt concentration. But home loan is a segment where you see even government is giving priority, RBI making their priority sector definition time and again. Keeping home loan into it is something which is evident that government wants to have everyone. Like they want a house for everyone. Now you have loan against property and personal loans too. They are into high risk zone, but still, you see, once in a while you can go into high risk zone too in order to have better returns. So you balance it, keeping rational in your mind principles of lending like liquidity, solvency, profitability, risk minimization, profit maximization. These points should be kept in mind when you go for it. Now you see who is your target audience for these different types of loans. You see, we usually tend to go for salaried people who are getting a fixed income, regular income. Okay, so blue chip companies, government employees, and then in case of self-employed people who will try to see their ITR returns. And for vehicle, you see salaried and businessmen, everyone is targeted. So it can be a car, it can be a two-wheeler, depending on your need. You see, if you're living in a metro means you see you prefer to go by a tram or you prefer to go by a metro. But you see, in small cities, you see opportunity is huge. There you see people don't have metro and all these public transport vehicles so frequently available. So there, because of congestion, even though in small cities also you do find congestion. So in congestion, it is always preferable to have two-wheeler. So even though you have a four-wheeler, but you use two-wheeler. So according to the need of your situation, you can fix it up. And then credit card is something again which is widely used by people nowadays, because you see salaries usually come only once in a month. But when it comes to, you see, expenditure, you have expenditure throughout the month. So you set your limits, and sometimes you use credit card wisely to make sure that you're gaining out of it. Now next is like retail loans. These are some of the important terms which are going to be discussed: fixed rate loan, floating rate loan, front end loan, flat rate of interest. You see, loan to value. So these are some important terms which are like, you see, any person who's supposed to be there in credit section should know. EMI stands for equated monthly installment. This is the amount of installment that you have to pay on monthly basis, which comprises of both principal and interest. Fixed rate of interest is a concept where you see your rate of interest is going to be fixed throughout the tenure of your loan. Nowadays, you don't find these types of loans. One thing is that which is like reset clause. Reset clause is a phenomena which gives an element of variation in your contract. Like whenever rates are revised in market, after a periodic interval, it can be 1 month, 2 month, or 3 month, your bank can revise the rates according to market rates. So if it is going up, they'll increase it. If it is going down, they'll reduce it. This is nothing but this is the concept of floating rate of interest. Okay, so in current scenario, there is nothing called as fixed rate loan. Floating rate is the need of R, and then flat rate is like NBFCs mainly use this model where they charge you. Let's say you have a 1 lakh rupee requirement, and on 1 lakh rupee they are going to charge you 30%. Now they are going to take this 30% on entire 1 lakh rupee, which is let's say 30,000 rupee. So on day one, they are not going to give you this amount. What they are going to do is like, this is in case of front end interest. So they will first deduct 30,000 rupee from your 1 lakh rupee and will credit 70,000 net amount into your account. This is what is called as front ended interest. And then flat rate of interest means here things are very clear. What is this clarity is like, they will be charging you, let's say 7% of interest on 1 lakh rupee, which is your loan amount. So throughout the period of loan, even though you are making 10 installments or you have paid 20 installments, this will not change the computation of interest. So it will be, let's say 7% on 1 lakh rupee is 7,000 rupee. So till last, they are going to charge accordingly. Okay. They are going to charge it on the total value, not on the reducing balance method. So this is what is there. Then you see gross income, take home pay, net pay. You see these phenomena are used when you are supposed to calculate the eligibility of a person. In this case, you see gross salary is 25,000, loan deduction is 15,000. So already 60% of your EMI is going into loans. So what is your remaining amount is 10,000. Now, can you take further loan? No. You see, eligibility here is to be calculated looking into their already existing loans. So out of 25,000, 40% should be for your basic necessity, that is food, cloth, shelter. And then 60% of your loan amount, monthly salary amount can be used for repayment of EMIs. So already you are exceeding in this case. Yani you are at the maximum point. No further loan will be granted to this person. So this is just an example to tell you where it needs to be, like how the bankers calculate the eligibility of an individual. And sometimes you see your retirement age is also very important. So they'll see how many years are left, and then accordingly they are going to give you a loan amount. Okay. Now next is like very important segment in loaning is like you have to understand the concept of documentation. So there has to be an application form which needs to be filled up by borrower. So borrower, along with, if there is someone existing in terms of guarantor or co-obligant. Co-obligant is another person who is willing to be a partner in this loan. So who can be a co-obligant in a loan? Let's say partners, if it is a partnership loan. If it is husband and wife, their income is getting clubbed for the assessment purpose. So they can be like husband can be a co-obligant or wife can be a co-obligant. Okay. So you see in this case, loan application is the first step. Once you get this loan application, you start the scrutiny of the same. How you do scrutinize the details given by a customer in this is like you will try to see how much income tax return has been filed by the party. You will try to see the credentials by some government issued like documents like Aadhaar card, voter ID card, passport. Okay. You can see the repayment capacity of an individual by checking their salary slip along with ITR. If it is a business firm, no salary slip, then you have to see the ITR return. Then you have PAN number. You see, you can check PAN card and Aadhaar card just to validate the credential. Okay. And then let's say you're working with a private company, we may ask you to give us some evidence from your company itself, like letter of offer or your salary slip. You see, these documents help banker to assess the credentials of an individual, and accordingly it can be, a loan can be decided whether it has to be given or not. Next is like in the set of documentation, it is your, you see, account statement. So I may ask, I being a banker may ask you as a, maybe you are the borrower in this case, so I may ask you to give me your last 6 months account statement. If you are individual, if you are a, again, business firm or a partnership firm, I may ask you to tell me, show me your account statement that you are operating already like operating with some bank. Okay, maybe in same bank or maybe some other bank. This tells me an idea about your background. You see, your character can be assessed, financial character can be assessed through your account statement. What I'm trying to target is like I'm trying to target your check dishonors or any default that you have done in past. Okay, this gives me a fair idea. I can look into your net worth statement in individual case, or if it is a like if it is a firm, I may ask you to bring me your projected balance sheet. Okay, old previous balance sheet of 2 years and next projected balance sheet can be looked at to see at what rate are you growing. Then we can see some of the machineries or collaterals that let's say property is going to be given to us. Warehouse is actually the collateral in this case. So we will be looking for the property valuation reports, legal reports, like the land on which we are going to make a house. We will be checking the title of this land. Okay, so maybe when you are trying to buy something in case of vehicle loan, you will be getting a quotation. Laptop loan, you are going to get a quotation. So that quotation gives an idea to banker that this is the total amount of tentative amount of requirement. So based on your total requirement, bank will be facilitating 80%, 60%, 90% finance. So remaining part you have to bring it from your side. Okay, so then you see you do have certain agreements where terms and conditions are mentioned. Reset clause we discussed earlier can also be a part of terms and conditions. So this is all into documentation. Let's proceed for next round is like you see there will be a personal interview where we actually look into your need. Why are you coming to our bank? If you already having an existing banker to support you, then we look into the technical viability. We look into the economic viability. You see, technical viability means do you have the desired level of experience, or let's say, do you have the skill set to undertake this type of project? We are trying to see what sort of technology is being used. Is it there with you, or do you have some tie-ups to bring it on ground to execute your project? Okay, or what project are you going to go with? Is it viable in given conditions? So everything has to be looked at. Economic viability means we need to understand regarding the financial returns that you're going to get from your project, your net income, projected net income. We are looking at, in case of an individual loan, let's say, we are taking the example of a gold loan here. Okay, loan to value, LTV ratio is a very important ratio. Your gold is, let's say, 50,000 rupees per 10 gram. So government, this bank has to fix a value. Let's say we are going to give 90% finance. So what it means, gold valued 50,000 rupee in market as on day. The maximum amount of loan which can be given in this case is 45,000 rupee, 90%. Okay, 5,000 rupee will be kept into margin. And whenever gold prices starts falling down, you see, in that case, you'll get a margin call from your banker for additional amount of security that you need to give, or some margin money has to be given. Okay, so just these calls are called as margin calls. So in case value of gold is going up in market, value of gold has gone up from 50 to 60, 60 to 70 due to a crisis. Now you see, in such a scenario, borrower is going to be benefited. So whenever value of gold goes up in market, borrower can always claim the enhanced value. Okay, so let's say you need some more money, you can simply go to your banker. Banker will be compelled to give you another 10 to 15,000 rupee looking into your market price. And then you see, what are the other factors which we look at when we give you a loan? We try to see your old account statement, we check your CIBIL score. Credit Information Bureau of India Limited is having your centralized data. They were the data aggregators in terms of any default and all. So higher score from CIBIL will be preferred for sanctioning loan. Customer detail through KYC needs to be done. Verification of property, physical verification. You say bank staff may visit your premises for doing their scrutiny, and then we may do a cross check of your employment background also from your employer, because the documents that you have submitted, now bank is free, they may verify any of the thing. Okay, then we'll give you an offer letter. So this offer letter means, you see, submission of legal documents and legal checks, everything has to be done. So legal document team is separate. So a lawyer or a team of lawyer or expert, subject matter expert will be there, will be hired for this purpose only, to give us a status of the legal check of your particular case. If they give a clearance, then you see, we don't have much of problem. We can simply go with technical check. We will check valuations once, revalue the property and all in context of a distress. Then registration of the document. This is nothing but, we do have a concept of charge creation, which is going to be up next in our next presentation. Now you see, registration of property documents will be done. You do the formalities so as to ensure that in future, if borrower is not going to default, in that case, like if borrower is not going to default, is all good, no problem, you can clear the dues, but you can settle the account. But if in case there is a default from the borrower, then you have to take up this thing seriously, and maybe you have to go to court, or through some other modus operandi you have to recover the dues. Hence it is very important. Documentation is the most important part. Signing of the agreement. So before you prepare your agreement, you have to read all the terms and conditions. You have to go through everything very precisely. Nowadays, you see, this was earlier manually done. Officer and other team of experts, they were sitting up late evening doing these documentations one day before, prior to the date of documentation. Party was informed, party used to come, and they were signing it manually. But nowadays, everything has been automated. So you have to fill it in, all information in a software, and wherever you are going wrong, software will tell you that problem. So automation has brought the level of operational errors down. Okay, so, and then you see, sometimes in case of loans, you are also requiring your client to give you some post dated checks, so as to recover the dues, or to use these checks on a future date when there is a need be. Okay, finally you will be going with disbursement. So till now what we did is, like, first application will come in, then scrutiny of the application will be done from all angles. After scrutiny, there will be a sanction order, or there will be an offer letter which will be given to client. After giving this sanction order, client will put a request, a letter, simple plain letter, for disbursal of money into his account, his or her account. And then this is your final stage where money will be actually allocated to the client. Pre and post scrutiny or monitoring is again a part of it. So even though it is not there in this slide, you have to understand that even after giving the loan, bankers are free to do site visits to ensure that the money given to the borrower is actually utilized in the right manner. Okay, let's go forward. Then we do have education loan. So you can do any degree in India, outside India. It is only meant for Indian students. Okay, it is only for Indian students. And then you see, usually for IITs, IIMs, top brass institutes in India, you see every bank is very happy to give it. But you see nowadays the trend is like everyone would like to do MBA, then you are into ICWA, chartered accountancy, certified financial analyst, okay, or you are doing some specialized course from NIFT or NID, you see, or you are into some sort of technical program which includes aeronautical, pilot training, shipping, or something else. You see, in all these courses, the fee structure is usually very, very high. Parents may not be able to afford. So once you get the degree, you'll get a good job. So in order to, in pursuance of your good job, you have to go through this degree, and for this, bankers are willing to give you loan. And education loan comes under productive purpose and is again a part of priority sector. But you see, banks are free to give loan up to any amount. But you see, if it is up to 7.5 lakhs, then it comes under priority sector. If it is more than 7.5 lakh, it is not covered under priority sector. So you see, up to 4 lakh, no collateral is required. 4 to 7.5 lakh, you see, some guarantor is required, and after 7.5, bank is free to ask for collateral. So you see, partially this education loan, if it is of a lesser amount, is going into unsecured loan category. Now you see, this is what they have mentioned further. So we'll not discuss much on it. The same thing that I've given you a summary, they have mentioned it here. So let's go to the next slide. Now next is like, you see, you do have personal loans. Personal loan is like, you see, banks to bank, you see this product valuations may vary. Some banks may give it up to 50,000, or some banks may give it up to 5 lakh. It depends on the credibility of the party who is expecting you to give a personal loan. Okay, so repayment period is usually fixed at 60 months. So 5 lakh rupee in 60 months, you can see it will be a very notional amount in terms of installment. But people who are earning, let's say people, there are so many people who are earning lakh rupee per month. Okay, so it can be possible that this value 5 lakh may not be suiting to your current requirement, but this is mainly for salaried people who are working with very strong institutions, like you say you work with Wipro, Infosys, TCS, big brands, or you work for any government agency. You see here, minimum, they have set in the minimum check, that is salary should not be less than 15,000 rupee per month. Okay, so this is how you have to proceed, and we need to look for co-applicants who need to be a spouse or a parent. In case of educational loan, father is always going to be a part of it. Documentation, again, we have seen the set of documentation which includes KYC, know your customer, PAN number, address proof, and some income proof from the guarantor. Applicant don't have any. In education loan, I don't see student working somewhere, but guarantor has to. Security, when it comes to security, it can be a guarantor or a security holder to be also taken as a guarantor. You see, minimum guarantee amount should be, yani you see, need to understand, the guarantor should have minimum net worth of at least twice the amount of loan. Then only he is eligible to give guarantee. Sometimes you see, you bring in a person who is ready to sign, but when it comes to his own personal net worth, you don't have any value, so he or she is not eligible to give guarantee. So guarantor has to have some sort of net worth. Now this is your house loan, which may be for renovation purpose, or for construction, or for buying a ready-made property. Okay, it may be a fresh sale or it may be a resale. Everything is accepted. Now this value can go up to 5 crores, because in metros there is nothing which you can buy in a lesser value. So maximum amount of repayment is 360 months. You see, it again varies. So let's say in a year, what is 360 means? It is 30 years. Okay, so, and there has to be some moratorium period also if we are making it. Moratorium period is the period in which you need not to pay any installment. Okay, and then retirement age is also very important, which you need to take into account. We mainly target salaried employees and businessmen in this category. Co-applicants means these are those people who are going to be an applicant in this loan case, and their income may be clubbed, like husband and wife coming up together. They both are working, hence their income can be merged up together to see the total repayment capacity of this house, and then household family, and then you see same set of documents are required, and whatever property documentation you do, it will be done according to the framed guidelines. Mortgage is a document which needs to be done when it is a loan for a house. And you see, we'll discuss mortgage later. Vehicle loan is the next dimension. You see, this is actually, again, we need to understand buying a vehicle. Why do you want a vehicle? Is maybe for personal use, maybe for commercial use. So according to your usage, rates of interest may vary. Loan policy, like you see, bank to bank, they may have different loan policies. Bank don't finance 100% amount of vehicle loan. They give a portion out of the total requirement, and borrower has to bring in something from their side. Okay. Again, maximum tenure varies from bank to bank. So I'm not going with this 84-month clause. So only thing to be kept in mind is like retirement age should not be crossed. Like just imagine, once you retire, how are you going to get income? And when you don't have income, how are you going to make a repayment? Okay, so we'll try to promote a repayment in a shorter period. Old vehicles are nowadays also getting financed. Earlier it was not, but now looking into the competitiveness into your market, so you see banks are ready to even finance your second-hand vehicles. Usually, second-hand vehicles are cheaper, and when utilization is done, you see buying a fresh car may cost you 10 lakh, buying a second-hand car may cost you 4 lakh. Don't you think this is rational? And when you are doing something rational, cutting down your own personal expectations of buying a new car. So you see, bankers should also be rational in their approach and giving finance, because the only thing is like bankers are concerned is like this vehicle should be of some value. Else, you see, it is tough for them to get a recovery. In case of vehicle loan, it is hypothecation which is usually created, okay, and then some minimum income. If it is like a salaried employee, minimum income is 15,000. So nowadays, you see, everyone is earning more than this, but still, people who are having a lesser value than this in terms of monthly income, they are not eligible. So if you are a businessman, we'll again check your ITR return for minimum last 3 years, and we'll see how you're doing it. Again, same set of documents. And you see, in terms of security, vehicle is your primary security. So we'll be registering hypothecation with your road transport authority. Okay, so yeah, the vehicle may be in your name, but it will be mentioned very clearly in your RC book that it is hypothecated to ABC Bank. So before selling this vehicle to someone else, you have to clear your loan and get an NOC. Okay. So next is consumer finance, where you see we have already seen it in one of our previous presentation. So FMCG goods are usually discussed in it. Fridge, TV, AC. These are the things that you can have it. It is open to both salaried and businessman people. So again, same set of documentation is required: PAN number, KYC, original quotation or invoice. You see, most of the time, what happens is like banks and NBFCs do have a tie-up with these vendors, and whenever client approaches a vendor during Diwali or Dashera or some other festive season, you see these vendors have already arranged for financer. So they may require you to have guarantor. They may require you, like you see, they actually finance you looking into your past record. So again, CIBIL score is very important here. Now with this, we are ending up this session with a couple of questions where answer is highlighted very clearly to you. So kindly go through it. See you later in next presentation. Good day.